Hey guys, welcome back. So in this episode, I want to talk about urban mobility transportation. Now this has been an industry that's been picking up in the past few months because there's several different companies that's playing in this space that recently came public. Now if you've been following the space at all, you'll know that EHang Holding has been one of the most popular stocks within this industry. Now this has been a crazy bull market. However, EHang Holdings saw its stock around 3 months ago rise from $10 a share all the way to an all-time high of $124. Now the stock is currently sitting around $54 at the time of this recording. However, it's still up around 400% from 3 months ago. So clearly there's a lot of optimism for the stock and this industry as a whole. Advances in aviation technology is creating the potential to provide convenient and efficient on-demand transportation for people and cargo within metropolitan areas. Now the urban air mobility market is expected to grow around 18% compound annual growth rate for the next 10 years, so it's definitely a growing industry. However, in this episode, I'm going to be talking about Joby Aviation, which just announced that they're going to go public via reverse SPAC merger with Reinvent Technology Partners, or RTP. Now, Joby Aviation creates electric air taxis, and they plan from the proceeds from this funding to be able to launch in 2024. So of course, it would be a much more speculative investment. However, I wanted to look in this company a little bit more because, for one, it's an interesting company and it's working in a growing industry. So in this episode, I'm going to be breaking down Joby Aviation and breaking down whether or not it could be a good long-term investment. All right, so let's dive right into it. So SPAC Reinvent Technology Partners surges after merger deal to list Joby Aviation on the New York Stock Exchange. Now, this deal will value the combined enterprise at a roughly $6.6 billion. And funding from this merger will allow Joby Aviation to launch its air taxi service in 2024. Now, this deal includes $910 million in fully committed funding, including $835 million in PIPE, anchored by Uber Technologies and a few other notable investors. Joby Aviation has spent more than a decade creating a fleet of piloted air-electric vertical takeoff and landing passenger aircraft. The company has conducted over 1,000 test flights to date and hopes to leapfrog sustainability over gridlock below, with its 4-passenger, emission-free aircraft that can travel up to 150 miles at speeds up to 200 miles per hour. So with that, let's dive right into what the company is all about. Now, Joby has been 10 years in the making, and they're a vertically integrated business model that sees both manufacturing and operating the aircraft. They have a vision to offer flights at the same price as ground-based taxis, which, if they could do, would be pretty amazing. So it has a pretty crazy design. It has 5 different blades at the top of it. Now they're saying it has a 150-mile range with a top speed of 200 miles per hour, including 5 seats, which hold 1 pilot and 4 passengers. Now Joby is really trying to compare themselves to existing helicopters, and they're saying that they're 100 times quieter than a helicopter. One, because they're electric, and they're also doing it at a fraction of the cost. Over a 25-mile trip, they're saying that the Joby S4 is 4 times cheaper. Now, one of the prime markets would be in busy metropolitan areas such as Los Angeles, and they're saying that it's 5 times faster than driving in major metros. They believe that this aerial ride-sharing would be able to unlock the third dimension of transportation, and this could be replicated worldwide. Now, the interesting thing is that Joby actually acquired Uber Elevate in January 2021, which combines industry-leading VTOL OEM and operations. Now, VTOL is vertical takeoff and landing, and the E stands for electric. Now, this would help them de-risk the go-to-market strategy and de-risk demand generation. Now, we're just looking at the illustrated market routes that they would potentially take. They're saying that they're trying to make trips that are only about 30 miles away. So these aren't really long trips. These are fairly short. However, they're targeting major cities within populated areas. Now, with any fast-growing startup in a pretty fragmented market, it's really reassuring to see that they have already committed contracts. Now, they have already $40 million in contracts secured with an estimated $120 million in their pipeline. They have operations that meet all the different FAA's certifications and future commercial operations. They have 3 government entity clients and their military flight reserve granted. Now, Dr. Will Roper from the U.S. Air Force and Space Force said, "We're announcing a world's first. Joby Aviation is receiving the first military airworthiness approval for an electric vehicle takeoff and landing aircraft." Now, another great thing is that they already have manufacturing in place. They have a partner with one of the largest OEMs in the world, Toyota. Now, This strategic partnership that they established in January 2020 helps bring this enormous manufacturing scale and experience to the VTOL sector. Now, looking at their timeline until 2024, we can see the certain milestones that they've hit and where they're planning on achieving. So in 2020, they received their certification bias. In 2021, they completed their certification component level testing. Next year, they plan on doing their FAA certification flight test. In 2023, they plan on start demonstrating their service and bringing up their mass production to scale. In 2024, they plan on having their commercial service launch in initial markets and their global commercial service launched. Now we can see that their existing investor base is pretty strong, as they have companies such as Toyota, Intel, Uber, JetBlue, and the list really goes on. So we already know that there's other notable companies trying to break into the space. So how does Joby stack up against their competitors? Well, they believe that they have a deep competitive moat. They expect to be the first to market with the right aircraft. They have 4 passengers to an aircraft, which helps optimize unit economics. They're making significant headway in their certifications, and they believe that they have a really good go-to-market strategy with their Uber Elevate acquisition. So with that, let's dive into the financials. Now we're looking at Joby's service unit economics in 2026. So, oh god, that's 5 whole years from now. So that's a really long time. But they're projecting that their annual net revenue per plane would be $2.2 million, which lends to the contribution margin being around $1 million. This translates to the payback period being 1.3 years in 2026. Now, their base case is that they would have a 2 to 3 city initial rollout starting in 2024, and they would achieve scale by 2026. Now, they believe that there's no further capital needed beyond the SPAC and PIPE transaction to begin their operations. Now, we don't expect them to see any revenue until 2024, and they expect that to be $131 million. However, in 2025, they expect that to grow 450% to $721 million. Now, their gross profit margins are around 58%, which means in 2024, they won't be profitable. However, in 2025, they expect profitability. So, of course, because this is a SPAC, let's talk about the transaction. Now, the pro forma equity value would be $6.6 billion. We can see that existing holders hold about 76%, PIPE holders 14%, and then the SPAC public holders would only be about 10%. So what they're trying to do is they're trying to compare themselves to autonomous ride-sharing companies such as Cruise and Waymo. What they're trying to say is that there's a large untapped addressable market. It's still in pre-commercialization phase. It has a service-based model with a strong network effect, and there's significant ability to scale. Now, although there's some similarities, I don't think that they should really be comparing them to these companies, because this autonomous technology is far more important and impactful, as Joby still needs a pilot to have to drive the aircraft. Now, Joby believes that their vertically integrated model will provide for strong growth and margins, with Joby boasting substantial scale of up to 4 times other emerging technology winners. Now, although it's great that they're going to see really high revenue growth and their valuations are cheaper than their competitors, we still need to remember that the revenue on a comparison basis to these companies is pennies to the dollar, and we're still having to project this out to 2025. Now, looking at their price to sales at 2025, it's around 6.4, and 2026 would be 2.3. Now, their PE for 2025 would be 25 times, and 2026 would be 5.6 times. So what does this all mean? Well, they believe that the cash flow supports attractive entry points for investors based off their present value of future aggregate value at an illustrative 20% discount rate. So in 10 years, Joby estimates to have 14,000 vehicles generating $20 billion in revenue, 5 billion miles flown, a presence in over 20 cities, adjusted EBITDA margins of 35%, and 50% plus recurring aircraft revenue contribution. They believe that they're positioned to be the world's leading operator of aerial ride-sharing vehicles. That's a bold statement. So I guess they're trying to sum it all up with key megatrends such as sustainability, urbanization, and new mobility technologies. Of course, they're saying that they have a massive global TAM. They have a vertically integrated business model that would generate recurring revenue. Since they're an electric vehicle, they would have 0 emissions, and they fall in line with the FAA's certifications. Now, they already have some pre-service revenues from government contracts, which helps de-risk commercialization. If they're able to hit their targets, they have compelling unit economics with 45% contribution margin and less than 2-year aircraft payback. They already have some pretty strong partners and investors, and they plan to commercialize aerial ride sharing by 2024. So yeah, I think it's an interesting company. I like their mission. I like the fact that they're an electric vehicle and they're trying to be a disruptor in a really fragmented and growing market. However, to not commercialize until 2024 is just a little too early stage for me. For them to come out to the public market in 2021 and not expect any sort of really real business within 3 years, it makes me really wonder why they decided to really push for this right now. I like the company, I like the mission, but I don't think it's an investment for me right now. So with that, guys, that was my breakdown of Joby Aviation. Let me know in the comment section down below what you guys think about this company, as well as what you think about this stock. Now, it's really good to see that they've been in the game for a while, they're founder-led, and that they have a lot of strategic partnerships. Now, clearly the growth story is there, but I think the question that we need to ask ourselves is, how big is this aerial ride-sharing market going to be? Now, if you believe in the projections and believe that this whole entire industry is going to continue to grow very rapidly, then I think it could be a good investment. However, for me personally, it's a little too early stage. I'd love to see them already start ramping up and start getting sales for the product and really understand how their business model is going to start evolving. Now, this is a really exciting industry, so I'm going to be looking into it a lot more. However, as of right now, I'm just going to be sitting on the sidelines and see how well this company does over time. With that, guys, thanks as always for sticking around. I'll see you in the next video, and let's go get that bag.